Hey everybody, it's Lisa. You may have heard, but it's spring. It's coming soon, and not only is it spring, it's a spring market, it's a seller's market, and I am working with a lot of clients right now who are struggling, just trying to figure out how they're gonna buy and sell, and I don't know. So I've got this really sweet couple, and she's pregnant with twins. And they're in a 3-bedroom ranch and they need more space. So we're looking to try and find them a bigger house. However, they don't have a lot of ready cash. Most of their cash is tied up in the equity of their house. And so I'm trying to figure out how I'm able to help them purchase a house, sell their house with as few obstacles as possible. So I'm gonna go see my friend Josh here at Newburyport Bank. I think he might be able to help us with this. So anyways, I'm gonna go have a talk with him now, see what we come up with. Hey everybody, thanks for joining us. As I just mentioned, the spring market is upon us, and I know so many of you have been thinking about taking advantage of the equity that you have in your home. Unlike any other time in history, I've been doing this a long time, I've never seen a seller's market like it is today. However, one of the jobs that I have is to minimize the stress of selling your home and buying a new one, and also trying to eliminate as many obstacles as possible. One of those obstacles is trying to figure out how you're going to use the equity in your house in order to buy a new house. So I think I have a tool that may be very useful to some of you out there, and we're going to talk about that today. So I'd like to introduce Josh Sanchez. Josh is one of the Assistant Vice Presidents of Residential Lending here at Newburyport Bank, and they have an interesting portfolio product that I think you're really going to have some interest in. He's going to explain it, and we're going to take it from here.
Thank you, Lisa. Thank you for the introduction. As Lisa mentioned, I am a Assistant Vice President, Mortgage Loan Officer with Newburyport Bank. We are in our Hampton, New Hampshire location, and we're here today to discuss a bridge loan and what that bridge loan is and how it's going to benefit you in this crazy real estate market. Okay? Let's discuss what a bridge loan consists of.
Oh, wait a minute. No, Josh, you got to tell them. This bridge loan, by the way, Newburyport Bank, they're local. However, what you need to know is we're talking about lending in New Hampshire, Maine, and Massachusetts. So this is going to cover the entire Seacoast region. We're going to geek out on you. Let's be real. Okay, I'm kind of like analytical, he's analytical, and we want you to understand what those numbers mean. So if we say you've got equity in your house, you're like, yeah, okay, what the heck does that mean? Josh, tell them what it means.
I'm a person that needs to visually see how this all works out. So I'm going to provide an example today, all right? At Newburyport Bank, we'll lend up to 80% loan to value for equity, okay? Let's say that you still have a mortgage on the home and you owe $300,000. Approximate equity that you have would be close to about $180,000, okay?
So wait a minute, so what you're saying to me is if I bought my house like 5 years ago, for like $400,000.
Okay.
That based upon the equity today, that I may have like almost $150,000 that I can use to go buy a new house?
I am telling you that right now, Lisa, yes.
Okay.
And this is why the bridge loan will be beneficial. Right. One thing I do want to mention, to point back to taking the stresses off of you, part of this bridge loan, we will pay off your existing mortgage with some of that equity that you have in your home. We then, Newburyport Bank, will make those payments for you. We escrow 12 months worth of interest payments, as this is an interest-only note. So you don't have to worry about making those payments on your current residence. We will take care of that on our end.
We've got this like $180,000 worth of equity, right? Because you're going to loan on 20% of the total value of the house.
Yes.
All right, or 80%. 80% of the total value of the house. All right, so that means that the total loan you could ever give somebody is $480,000.
Correct.
Okay, but I've got a mortgage.
And we're going to take care of that.
So you're going to, all right, so basically what you're doing is you're paying off my mortgage.
Taking the stress off of you, Lisa. We're going to pay that mortgage off.
All right, fabulous. And then you're also going to escrow the payments for the next year so that I don't even have to worry about making the payments on this mortgage, this bridge loan mortgage, until I pay it off.
The beauty of that, yes, we're going to
Okay.
make those payments, Lisa. And let's just use this as an example. You know, your home might sell in a month, maybe 2 months. The beauty of the escrow is if we have to make the payments, we will, but that's your funds. We are giving you those back at the time of closing when you sell your primary residence. So again, that's taking the stress off of you. Please keep in mind that those escrows do go back to you.
Oh, and also the 20% that you didn't loan on. So let's just so you guys understand this. So your house is worth $600,000, right? They're only going to loan on 80% because, you know, they need to protect the bank. All right, let's be real here. Okay, but so they're going to loan on $480,000, right? They're only going to allow you to use about $150,000 of equity. You still have $120,000 in equity that when you sell your house, it's yours. Or do you get this? Like, this is yours. So even though they're loaning you only so much, you still have like another $120,000 to talk about. So at the end of the day, you know, if you've got a house that's worth about, it's worth about $600,000. Those are the numbers we're
Correct.
working with.
Yes.
Right.
Absolutely.
And you got a mortgage about $300,000. They're going to pay off the mortgage. It's going to cost you probably about $7,500, give or take. You know, let's not get real specific here, but give or take, in order to utilize this product that then eliminates all that stress, flattens the hurdles, removes the objections as to how do I sell a house
Purchase.
and how do I purchase a house at the same time, right?
You're grasping the concept
Okay.
here, Lisa. You're here, absolutely. You are right. Again, this is to eliminate the stress. Into the market that we're in right now, where it's so competitive, we'll eliminate that contingency to sell your home.
Nice. Okay, and so you guys understand that when you're buying a house, and again, using I can't say that word. That the one that he just said. So let's say you're buying a $600,000 home, and I'm your buyer's agent. Okay, I'm going to probably say put down 2 or 3%. That's about $18,000 to $20,000. Okay, so understand that I'm only asking for you to come up with maybe $18,000 or $20,000 in order to move forward with the contract. All right, you can then decide with Josh, because Newburyport Bank is actually going to also be taking out your primary mortgage. All right, you can then have a conversation with Josh as to how much you then want to put down as a down payment on that primary mortgage. Maybe it's all $150,000. Maybe it's the additional 20% that they're actually not talking about right now. I don't know, but at the end of the day, you guys are going to work those numbers out, right?
We absolutely will, Lisa.
Yeah.
Absolutely.
And so, and I know Josh hasn't touched on this yet, and you can talk a little bit about it, but what's going to happen is you're going to come in, have a conversation with him, and get pre-approved. Like, we need to know what you're able to buy, like any purchase anywhere, right? So he's going to sit down with you and talk to you about getting pre-qualified and / pre-approved. We can talk about the differences later as to what it is you're going to be able to purchase, and also talk to you about what the bridge loan is going to look like.
So we're going to discuss the benefits of a bridge loan and how that's going to help you out, eliminating the contingency on the sale of your current home so that you can go out and find your dream home. I'm now going to turn over to Lisa and have her discuss the benefits of the bridge loan in this real estate market.
Thanks, Josh. So everybody, as you may or may not know, locally, real estate has appreciated over 20% on average in just the last year alone. And because of that, what we really need to do is talk about how the equity in your house has significantly increased since you originally bought it. So everybody, as Josh just mentioned, one of the things about the bridge loan is it allows you to use the equity in your home to actually purchase a new home without having to sell your other one. And that also, by taking out a bridge loan, it's going to eliminate the home sale contingency. So for any of you who've been following the market, you understand right now that It's pretty crazy out there. There are multiple offers on so many properties, and when you're going out, we need to be able to position you as strongly as possible. And a home sale contingency, unfortunately, could be one of the factors that may eliminate your ability to actually purchase a home. You may be beat out by somebody who doesn't have a home sale contingency. So by eliminating that, we are positioning you to better able get the house of your dreams. So that's one benefit, huge. The other one is everybody's got equity in their home now. That's the idea, is if you bought your home 5 years ago, I promise you, you probably have more equity than you can even imagine. And instead of having to take money out of, let's say, your 401k or the stock market, you can use the cash that you're going to get within the equity of your home to make that purchase. You can use it for the down payment on your new mortgage, which, by the way, you're going to have with Josh here at Newburyport Bank. Couple other things. Some of you may have heard about people having to do something what we call is bridge the appraisal gap. So in order to be competitive when we're putting in offers on new homes, you may go in a little bit above asking and you may say, look, I'm willing to actually pay any extra there might be, which is called the appraisal gap. Well, now you have the cash available to do it. Otherwise, you may not be able to actually take advantage of one of the little tips or techniques that we're using right now to get you ahead in this crazy game. You're also able to make home improvements prior to moving in. So this is one of the other huge things is, let's say you buy a home. Maybe you're looking for a fixer-upper, right? You want to put your own stamp on it. Well, you can live in your current home and you're going to be able to use the equity from your current home so that you can purchase your new one and then go in. Maybe you want to redo the wooden floors. Maybe you'd like to do some painting. Maybe there's a bathroom from 1962 and you're just not a fan of, mint green and you want to do something a little bit more modern. We've got the money to do that for you. Let's talk about one of my key factors when it comes to working with my buyers and sellers. I've said this for as many years as I've been a realtor. My job is to eliminate as much stress as humanly possible, because selling your house, buying a house, moving the kids, moving the dogs, it's in the top 10 stressors of life. And I really take a lot of pride in trying to help eliminate as much of that stress as possible. A bridge loan might actually do that for you, because now you can move without the time constraints of having to work with let's say a mover, all right? And they only have 3 days available, and it's gonna cost you an arm and a leg to pick one of those 3 days because it happens to be the end of the month when they're the busiest, things are most expensive. You can move at your will. So you can casually move stuff over, buy your first house, move things over, and then schedule the mover when it's convenient for you and also maybe a little bit less expensive. You also, maybe your house isn't in the best shape, but the idea of trying to finagle kids and pets and cats and dogs while you're getting contractors in there to get your house in better shape so you can net as much money as possible on the sale, it's just too overwhelming. So again, here's where the bridge loan might work for you. You get to buy your new home, move everything over, and now your primary home is empty. You can bring in a painter, you can bring in cleaners, you can make the little repairs that every home needs once you remove everything and you realize just how much everything needs, right? And so then you've got the time and you have the money. You can pay for the movers, you can pay for contractors, you can pay for painters, then you can even pay to have a stager come in, perhaps even bring in their own furniture, because you've freed up the money to do that and it's not as overwhelming a chore to think about. And finally, here's the thing that some of you, Josh is going to get into this, okay, a little bit more when he's talking about the specifics of the loan, but this is your money, and basically what you need to understand is any of the money that is left over from the equity of your house that you haven't used, it's yours. It goes into the bank. You can use it however you want. You can put it towards your primary mortgage at the end of the day. You can put it towards a kid's college education, whatever the case is. But really, the idea, truly the benefits of utilizing this as a tool for being able to sell your house and buy a house eliminate the home sale contingency, free up the cash that you have right now, I promise you that you have in your house, and being able to utilize that money to make the necessary repairs either in the new house or the old house, or pay for those movers, pay for those stagers. It's huge. When you buy your home, your primary mortgage is going to be with Newburyport Bank.
Correct.
The bridge loan is going to be with Newburyport Bank. And when you sell the house, you basically can write that bridge loan off, right?
It right off. And to bounce a point off you, Lisa, we also at Newburyport Bank, we're going to service and retain your mortgage. You do have the opportunity to make a one-time curtailment payment, which means you receive the proceeds from the sale of your house. You can then turn around and make a one-time pay down on the principal of your new home that you just purchased. Again, that's all serviced and retained by Newburyport Bank, so that is an option. Once we reforecast that payment, it's going to reduce your monthly payment.
Yeah, so basically, okay, for all of you nerds out there, what he's trying to tell you is that if you're taking out a $500,000 loan, once you sell your house and you have an extra $100,000 from the sale of your home, you can drop it on this primary loan, right? And now it's $400,000.
That's exactly what I'm telling you.
And
yes.
your monthly payment goes down, right? Do you see what we're doing
See
here?
where we're going with? See where?
Yeah. So a couple things that, you know, in talking with people about bridge loans, one of the biggest questions that people have had that I would very much like to address, because I want to eliminate a fear, and that is the bridge loan is good for 12 months, right?
It's a 12-month, yes, it's a 12-month note.
Okay, but as soon as they sell their house and the bridge loan goes away.
Correct.
So it could be 2 months, it could be 8 months. Right?
Absolutely.
However, the one thing that I think is key is while you're getting pre-qualified for this, the bridge loan does not go into effect until 1 week before you close on your new house.
Correct. We line that up, so we want to make sure that bridge loan is closed prior to you closing on your new home that you just went out and purchased. So we want to make sure those funds are ready and available the following week that you go and close.
Yeah, so you're not taking this bridge loan out like today
No.
and then going to look for a house in June and paying, like you're not
Correct.
making payments on a bridge loan now for a house that you don't own. They're not even going to, if you will, trigger that bridge loan.
Yeah, if you want to say, yeah, absolutely.
Right, until a week before you close, and then the funds are available. And guys, understand, they're going to be the holder of the primary mortgage.
We will be.
So this is a seamless,
simultaneously.
yeah, this is a seamless thing. It's not like you're sitting closing on your mortgage and now we have to worry about where those funds are coming from, what bank they're going to. That's we don't have to worry about that, right?
It's all done on one umbrella, Lisa.
Yeah. What else? Have we missed anything?
I think that you touched on some great points of the benefit. Again, we recapped on what a bridge loan actually is and how to obtain one. Okay.
Yeah.
Again, what you would do if you are interested, you would contact myself. Again, we're a local community bank. If you wanted to reach out by telephone, email, we could do a Zoom conference if you wanted to. We could start the application process. The first thing that we would do is we'd revert back to the bridge loan diagram and we'd figure out, how much equity are we going to work with and what your budget will allow you to work with as well, okay? Then we'll actually start the application. During that application process, I will ask for supporting documents. We'll get into that spectrum while we take the application. Pretty basic things that I would request, okay? Once I've completed that application, I will then deliver it to an underwriter for an official approval. Once she sent that or he sent that back to me, I will then deliver that commitment letter for financing to Lisa and yourself, and it would be happy shopping and find the dream home of your choice.
Nice. So guys, like I said, this is a tool. This is a complicated market, one that you really need to think about every avenue that is available to you in order to assist in the purchase and sale of your next home. So what we're doing here is we're basically putting another tool in your toolbox. Our job is to help really eliminate the obstacles, minimize the stress, and help you figure out the best path forward so that you can upsize, downsize, right size.